Good morning, everybody. Welcome to our first ever midweek update streaming all over the world. Man, oh man, do we have a lot to talk about today. Let's jump right into it. And here we are. Let's get this stream going here and we'll zoom in and I'll show you exactly where the market is right now. So what happened here, right? Decent drop today on the S&P 500. If we zoom out over to the Russell, you could see that a bit worse here, right? Russell is down about 2.25%. At one point, it was down almost 3% on the day. And so, what in the heck happened? Right? Well, what caused this big drop here? Well, the drop happened with CPI, right? CPI came in above expectations. I'm just gonna read here what I wrote down in my notes here, right? So where are we at? CPI came in above expectations at 3.8%. And that's what led to all these beautiful gap downs that we saw here. Now, did you need to know that? Did you need to be actively following the news and CPI numbers coming out so that way you could avoid this? Go ahead to let me know. Is that something that you're actively monitoring? Type into the chat, please. Let me know if that is something that that you're looking at, these CPI numbers. Also, let me know if maybe you were caught off guard by this move up here, or I should say this move down here, down move in the Russell and many stocks as well. Were you caught off guard? The key, I think, for so many of us, especially when it comes to trading and markets and all these different things, is that it's not about prediction. Right? Well, we don't have to predict anything. We just need to be ready. So, how could you have been ready? Well, now, what did we talk about last week? What did we talk about last week? Well, what did we talk about on Friday during Friday's live stream? What did we talk about over the weekend? For those of you that are in the newsletter, right? We've got a free newsletter at marawealth.com. We spoke about this over the weekend as well. What did we talk about? We spoke about this over here, right? Come over here to the S&P 500. This day right here, that was a big day. Well, what happened on that day? Well, a few things happened on that day, right? Just on that one bar, it was a negative outside reversal day. Well, what does that mean? That means that at one point, price pushed higher and then it closed lower all the way at its lows, right? Big bar. Very different than what we had seen previously, right? It was a big change in character. That change in character changed a lot of things. For a long time, you see how price was getting support at that purple line, right? Like price action would come down, bounce off of that purple line, bounces off of it again back here in January, comes close to it towards the end of January, rallies, and then all throughout, right? All throughout February and even for the first part of March. And then over here, first week of April, this is the first time that price closes below it and closes definitively below it. And not only that, all the things that happened on there that changed the character of the market. Distribution day, seventh distribution day, right? I don't know if you could see it on your screen, but this day was the seventh distribution day over the past 25 days. Oh, we spoke about that too, and why tracking distribution is important. It was also a distribution cluster. We had a bunch of those down days in the market over the span of 2 weeks. Right? Well, we had 4 of them in the span of 2 weeks. That's another type of change in character. So, did you have to predict the down move that would happen here or today or on the Russell? No, you didn't have to predict. What you needed to do was be ready. How can you be ready? You can be ready by actively tracking on a day-to-day basis, and that's where we're at right now. if we take a look at stocks that are setting up, right? So one of the things that I like to do, and this is something that I do every single day, I share it well with our members, is stocks that I'm tracking, right? I'm looking for stocks that are setting up in base patterns, and the ones that were setting up, that were kind of close to setting up, are right here, right? All these stocks that you see right here, I have this group ranked as Bs. I have a group below that are ranked as Cs. Why grade these trades? The reason why is because, well, that it's my perspective on the quality of these setups. And quite frankly, I found something wrong in pretty much all of them. Right? It's not where you're looking for a perfect setup, but if you start to see major flaws, then that's something that you should start to shy away from, because you're putting money into this thing. You should be going for A level setups. There were no A level setups. Even some of the ones up here, right? Like with net, uh, you zoom in and price was tightening up right around here, right? That this one actually looked halfway decent at one point. The problem that I had with it was that the risk was too much. Right, the risk was 5% coming into this thing. Most stocks, if you actively, and this is why tracking trades is so important, right? And tracking the stocks that you're interested in are so important. For the stocks that I've been interested in, I track all of them whether I'm in it or not. And what I've noticed is that most of them have been ultra choppy. Most of them barely run 5%, and then they've been falling back in. And this isn't just something that started happening yesterday. This is something that started to happen over the past couple of weeks. So that's changing gears too, right? Because I only want to be in high probability trades. I only want to be in high reward to low risk trades. So if most trades are running about 5%, and I find a trade like this one where I need to risk 5% up front, then what happens? We've got a one-to-one reward to risk, right? Five on the risk side, five on the profit side. That doesn't really do it for me. So if I'm looking for a trade that I want to get into, I would really need to look for a trade that would be a lot closer to, say, 2 to 3% risk at this point. And you know what? For the most part, that's part of what's keeping me out of a scenario where the market gaps down, like like this here, right? Russell down 2.5%. Let's see what questions you guys have. Gonna go through the chat. Got a whole lot of people hopping on from Instagram. Welcome everybody. Welcome, welcome. And get your questions in about the general market. Let me know. Let me know if you were caught off guard by this move, and let me know what you're doing about it. Here's something else, well, with the market too, and uh, something else that I think is worthy of tracking every day. Right, this is a midweek update, so I want to try to keep on point well with uh, midweek. We want to track the trade ideas every single day. We want to see that. I think that that's going to be one of the best gauges for us, is to see how are the stocks setting up? How is the market treating those setups? And then from there, well, what's the general market doing? What's the general market doing? Not just on the S&P and on the Nasdaq, but we've got all these other charts here too. What's it doing on the Dow? Right, the Dow just undercut last week's lows. It just undercut the lows from for March, and the Dow is in a downtrend. How far is the Dow going to fall? Well, we don't know, right? But what we can do at this point is start to think about, well, where are the next levels of support, right? So if you're actively trading like I am, one of the things that I like to do is to see where we're at and then look into the future, right? Not what we're trying to predict, but just to see 10,000 feet in front of us, right? Like one of our members, Patrick, he's a pilot, and so he likes to see 10,000 feet in front of him when he's flying, and that's where we want to be. So looking at this, how can you be 10,000 feet in front of you? Well, we could start to measure where is the next level of support. Right? If you're looking at this chart here, where's the next level of support? I would draw support right here. Let's zoom in a little bit. Support from back here, February lows. If we come over here and start to take a look at some of the other time frames, right? And this is where multi-time frame analysis can start to come into play. This is where you would look at, okay, here's the weekly chart of the Dow, and this point right here is a point of potential support, right around 38,000. It's February's low. Price was getting support around there. It's a big round number. How about the monthly time frames? If we're looking at the monthly time frames, that's not that far from where we are right now. The major level, or a more major level, would be down here. Prior resistance from January of 22. If the market does fall that far, even that's not that much. That's 3.5%. Something that I wanted to make sure that I mentioned. I just glanced down at my notes and I saw this. Something that I want to make sure that we talk about is the notion of buying the dip, right? The notion of buying the dip. Buying the dip has worked for a very long time. Buying the dip worked all the way. Get my face out of the way. Buying the dip worked for this whole uptrend, really going back to October, November, right? Well, whenever price would dip, buy the dip, right? Buy the dip over here, buy the dip over there, buy the dip for most of this, right? Even in this section here, buy the dip, sell the rip was working. The character has changed. If you try to buy a dip now, you're likely buying a falling knife. So what should you do? Couple of things. One is being defensive. Two is being patient, right? Like all the principles that we normally follow, all the principles that all the market legends have spoken about, all the principles that I talk about in the Trading Mind Wheel, all of the rules that we talk about here all the time. The rules are that we need to manage risk. And risk has to be managed in real time. Risk has to be managed. You need to even start thinking about risk before you put on your trade. Where are you going to cut the trade law if it's wrong? If we start to think about things like that later on in the trade, once you've executed, it becomes all too easy to say, you know what? I really believe in this company. I really believe in the story. I think that the Fed is going to do something and prices are going to go back my way. Problem is that every now and again that'll work. And when it does work, that's incentive to break the rules again, get lax on our risk again. What inevitably happens though is that you just need one time for the bomb to go off. Then you have your hands blown off and your account blown up. Defense first. Second thing that I'm looking for major areas of support. Major areas. I'm not just talking about the 50-day moving average here. Actually, let's bring up Nvidia, right? Let's bring up some of the big leaders. If you're looking at certain leading stocks or have been looking at certain leading stocks, let me know. Type into the chat. We'll take a look at those. But here's Nvidia. Nvidia looks promising today, right? Nvidia came down yesterday. Oh, it came close to the 50-day moving average. If you popped over to a weekly chart, you might have seen, oh, price ran up and it was the first test of the 50-day. Let's pile in right here. And so far, you've been rewarded, right? Price is up 1.5% from yesterday. Great. If you're not willing to hold that position for a little while, you're in a spot where you're picking up pennies in front of a steamroller, right? Because there's plenty of overhead supply back here. The market is still choppy. So it's very possible that price could rally and come right back in. Are you willing to sit through that? Would you have necessarily picked up Nvidia? Or maybe you're somebody else that was looking at, I don't know, let's take a look at what SMCI was doing. Well, SMCI pulled back a couple of times here, right? So SMCI bounced off the 50 on Monday, right? So let's say that you're that guy that you bought in right near the 50-day over there, but you're not willing to hold. So you get cut over here. But price rallies and you said, oh, I'll get in. And then what happens? Price undercuts again. So how you start to think about the different ways that you might play this start to play a factor, don't they? Right now, the odds are chop. That's what we've seen. That's what we've seen on the indexes. That's what we've seen in a lot of stocks. And for the most part, there's not too many quality bases. Those are the things that I like to look at to tell me which way the market is moving. The reason why is because I don't want to have to rely on, or one of the reasons why is that I don't want to have to rely on the news. We started this conversation talking about CPI being above expectations. That's not something that I would typically talk about or track or even look at. The reason why I even brought it up is because so many of you out there are looking at this. And then when we take a look at the market, we can infer what the market's doing and say that, aha, that's the reason why the market is doing X, Y, or Z. But did we know that? Did we know that when on Friday, when we did Friday's live stream and we were talking about this outside reversal bar that happened on last Thursday? No. Was it a part of the weekend newsletter? No. It's, well, one of the great things about trading is that we can make up whatever rules to the game that we want. The only thing that we want for the game is that it should be leading us to more money in our pocket if we continuously play the game. And that's kind of like playing like a casino, right? Maybe you've heard that term before. Be like a casino, trade like a casino. Well, what we want to be able to do is play again and again and again and again, and at the end of it, have a positive result. So, is the way that you're playing the game yielding you a positive result? Ask yourself that question. How has Q1 of this year been for you? If what you're doing has not yielded positive results, then it's a sign that something, some element, I don't know what that element is for you, but some element of it needs to change, right? Because if we keep on doing the same thing over and over and over and over again, and we expect a different result, then that's Einstein's definition of insanity. We need to trade in a way that's going to lead us to the results that we want. Other questions? Gonna scroll back through Instagram first. You guys that are watching over on Facebook and X and other spots, type in. Let me see. This session have a lot of golden nuggets. Great, I'm third. Yeah, tell me. Well, what were some of the golden nuggets you got? Let me know what some of those golden nuggets are. I'd love to hear them. I've got a hard stop today at 11:30. So, depending on where you are, that's 8 minutes. But for me, it's 8 minutes. Yeah. So patience. Yeah, patience is important. There'll be plenty of times where we see a stock ripping, and we might want to hop on board. Right? Here's a couple that I was looking at earlier in the week that seemed interesting. Right? There was Reddit. Reddit looked interesting over the weekend. I put an alert. The alert triggered on Monday, but I'm not in this. Why? Well, market's not proper. There's some other ones, right? Though ARM. ARM seemed like it would be a good idea. Why? Let's turn off all the annotations because ARM was tightening up right around the 50-day moving average. ARM actually popped out on Monday. It started to follow through on Tuesday, but it too reversed. We need to be patient. We need to know our styles. From an intermediate to longer term perspective, the this action in ARM is actually not bad. I'm looking at it through how am I going to fit this move into how I'm looking to trade. I like to swing trade. And like I mentioned before, if I need to risk uh, more or roughly the same as the amount that I'm possibly going to gain, then is it worth it? And that's the question that we need to ask ourselves. And if it's not, then guess what? We don't have to play every single hand. We could wait for the proper time for our system. I'm third. I'm third says, I just got a gap down in GWRE. Let's take a look at GWRE. Okay, yeah, gap down, price gap down, 2%. All right. Let's see. Well, what was the rest of the question here? Yeah, had a gap down, and it's hard to find to stop finding something to re-enter. But after listening to the session, it's clear my head and let me focus on what the market is telling us. Yeah, absolutely, absolutely. So here's something else. If I'm going, whenever I want to, or when I'm stopped out of a position and I'm trying to find, well, should I re-enter this or not? What I look at is there a setup here that I trade? If there is a setup that I trade, then I grade that setup. And is it a good one or is it not a good one? If there's no setup here that I trade, then I wouldn't, then there's nothing to do, right? Because what we're trying to do, whether it's GWRE or any other trade, our objective is not to trade this and be right on it. Our objective is to make money. So it doesn't matter if it's GWRE or AWBC or LMNOP. The thing that matters is our equity curve, and is our equity curve steadily rising? Well, how do we get our equity curves to steadily rise? By taking high quality setups, by taking high reward to low risk setups. That's how the math is going to work in our favor. What other questions do we have? Got 4 minutes. Got 4 minutes. You guys on Instagram are fairly quiet. Well, what do you guys think of the vertical setup? My friend Dennis Wilborn, who I do the Trading Truths podcast, turned me onto this idea of doing a vertical stream. And so I thought, you know what? That'll be interesting to try. It'll be good for Instagram. But you guys over on Instagram are fairly quiet, so we'll see. We'll see if we stick well with you guys. But I do want to hear, yeah, well, what do you think about the vertical live stream? If you're watching it on some other platform too, if you're watching it over on YouTube, let me know if you like the vertical better than the landscape. If you do, then we'll do more of these verticals. If not, then we'll switch it back. Got about 3 minutes left. You guys get your questions in. I'm going to drink a sip of coffee. All right, fellas, then if that is all that we have for today, then I want to say thank you guys for joining me here. Let me know what you thought of this midweek update. In just a little while, we'll be hopping on and doing another live stream for our members, giving a little bit more detail into the midweek update, doing a wide open Q&A. Well, we'll be going for an hour. That starts at noon. And then more coaching calls and other things going on throughout the day. So I'm glad to spend at least a little bit of time with you. If you'd like to join us, or if you're not already on the newsletter, make sure that you sign up to the newsletter. The newsletter is looks like it's that way, marawealth.com/newsletter. Make sure that you're getting that. We publish it every Sunday, sending out lots of education, market updates, trade ideas, whatever I'm doing, I'm posting it in there. And that's it for today. So again, I hope that you enjoyed this. Let me know. Always looking for feedback on how to better serve you. And that's all for today. Take care. Much love. God bless. Peace out.